Welcome back, guys, for a new episode on Value Investment Series, and this episode is exclusively for beginners. If you're new to this investing process in the stock market, I believe this will be really useful to you. This is part 1 of this entire series. We'll go through multiple parts with various information that would be required to complete your investment journey. Finding that one good stock needs expertise in the business. As a beginner, you have an advantage. A small investor is a consumer as well. You are consuming a lot of products. So you have first-hand information on these products, and you can use that to your advantage. Unlike trading, value investing has proved to be very efficient and works in India and every other country. Whatever market you are in, value investing really works. I have over a decade of experience doing value investing. After my postgraduate degree, my master's degree, I was able to get insights on different research articles, and this has really helped me understand and put theory into practice. So what I have done here is use the theory, which does not really help in itself if you don't put it into practice. So I have taken the theory, skimmed through all the information that can be used for a beginner, and I'm going to tell you exactly how you can make things happen in your investing journey. So, as a small investor, you are a consumer of a lot of B2C products. So, a consumer will know about the declining trends of a product before a foreign institutional investor or a domestic investor who is pretty huge in size. There are different management level decisions that need to take place before they can even identify such a case. So you have an edge over them because without knowing, you actually have more insights than an average analyst who works 9 to 6. So use your strength and get at par with those FII and DIIs and maybe do better than them. That's possible. This is the only place where even a beginner can outperform an expert. You can prove that. I'll tell you how. How do you do that? Use the power of compounding. That's a wonder in this world. Don't miss that opportunity. Use time as an effective variable to increase your returns. Time is a great compounding machine. So pick the right stock and keep holding it as long as the business is intact, and you will reap great benefits. Your returns would be at par with the great investors that you see on television. Probably you might do better than them. Trading is risky. If you can get the same returns or maybe a little more than an average trader, your actual risk being low means you have done better than them. So stay tuned for the next part and don't miss the next part, which is quite interesting as well. Until then, bye-bye.